everyone, welcome back. This is Sterling Trades. It's the morning of Thursday, July the 23rd, and today I just want to cover what we have so far from the week from a technical perspective, from a fundamental perspective, and finally, I'm going to cover the concept of interest rate differentials. As I have mentioned a couple of times, I was not able to get to it in previous videos, but today we have the chance to get to it, and we will see a potential keyword being potential play that is likely to be influenced by a possible interest rate differential, but it's not something that could be happening this week or next week. It's something we'll have to wait and see. So anyway, if you're new here, if you're new here, this is Sterling Trades. I started this channel as a way of documenting my journey to making consistent profits from the markets. So I think we'll just dive right into it. We'll start our breakdown, look at what the markets look like this week. Look at what the fundamentals are saying, and then go from there. So let's start with the dollar index. The dollar index has been generally pushing higher, has been bullish. We did manage to catch this previous trade here, and it broke above uh, a level where it had been consolidating for the past around 1 year, and now we saw it pull back and retest that level at about $100 flat, and then bounced quite nicely off of that level. We like to see price move away from a level where you're looking for an entry pretty quickly, and that is what we saw after it bounced here. You can see price almost immediately pushed higher or pushed away from that level. So we remain, I remain bullish on the dollar index. I think the possibility, so my current target is around 101.5, which is the level of the previous high, with the possibility of it breaking higher to about $102 flat. And after that, I think the next logical place to target would be around this consolidative area. If you go to a lower time frame, I know this area will be a consolidation zone. So about 103.5 ish, that will be the next logical target. But generally, if things remain as are, we could see it push to 113, but that is definitely a higher time frame play. So on the lower time frame, it is 1 hour. We did see can see it clearly in a nice uptrend. The H1 did do another pullback here, formed a nice flag. Uh, Gives us an opportunity, gave me an opportunity to add a position. This is usually a short term um, position or a short target. Um, I could decide to let it play up to this previous high here. I'm going to target this previous high at around $101 flat. Um, so to improve the risk reward on that play, right? So me being bullish on the dollar means I'm still bearish on gold. Uh, we saw gold bounce off the around 4,000 area, which has since played as quite a strong support level. I see gold is sort of consolidating after months and months of being in a downtrend. Um, as you can see, it's pushed down. Yeah, it's pushed down, respecting this trend line over here several of times. So it's been pushing and pushing lower, and eventually it's bounced back, and we are seeing it back to that level again, and it has since hit that trend line again, and we have seen it bounce off very nicely. You can see right here it's breaking the structure of this recent uptrend, and so I had marked this zone before. So what we could see it do is maybe push lower, come back to test this level, and then maybe see it continue to drop further. At which point I think I will be looking for an entry somewhere around here with my stops above there, and my I will target around the 4,000 level, right? Just below here where it had been bouncing off a couple of times. This bounce, it's a nice bounce from this high. Um, as you can see, let me show you something here, right? I saw initially wanted to take an entry here because as you can see, we were seeing a price push higher, but on the RSI we had a bit of divergence. So as price is pushing higher, but RSI is telling us a different story. This shows slowing momentum of that uptrend. Um, yeah, but I couldn't take an entry here, so I had to wait for that break of structure. And as we see, although this candle is yet to close, if we see it close below, I try not to rush into it and take my entry immediately after the break. You could see it even push higher and then push lower. I think if with with this trend line pushing with this trend line where it's been respected a couple of times, that means there is liquidity lying above this trend line, and as traders continue to short gold, I think there's been quite some bearish sentiment on gold. We could see it um, push higher, collect liquidity, maybe all the way to 4,200 or around 4,200, and then maybe see it push back lower. So, yeah, I'm bearish, but cautiously so. I'm not in a rush to take any position on gold at the moment, but I'm waiting to see if it gets this bounce, retests, and then maybe I will take a position. If it decides to take this second play, then we could see something like to call a three push pattern. I learned this from uh, someone I look up to. Um, we could see a three push pattern somewhere around here. Let me show you. Yeah, we could see a three push pattern where we could also see divergence. So you could see um, this push higher, yes, but it fails to push. Momentum hapa ikosa kukua momentum, maybe not as much. So we could see momentum still dropping, but price pushing higher. So that would sort of confirm my bearish bias, where now I could take a position even at these highs. I could take a position even at those highs. But anyway, we'll see how price plays out. Next, let us look at silver. Looks pretty much the same as gold. Yeah, also waiting to see if it pushes lower, retest this level, and then look for a short position. Again, I'm still not in a hurry to take a position on silver. As well, gold. If you remember my last video, silver and gold are the ones that really punished me. So I'm a bit cautious. I know it's not the fault of silver and gold. It was rather my emotional trading. But yeah, let us see how they play out. Also, I'm waiting for pretty much the same thing on gold, right? Yeah. Let us look at oil. Oil has been ripping higher and higher and higher. Um, yeah, respecting this um, higher time frame flat pattern. We see oil push all the way to 119, which was around the highs of which was the result of the US-Iran war. And I think I will talk about fundamentals, but let me just mention, I think the story for higher rates the Fed holding rates for higher is pretty much supported by energy prices pushing higher. Yeah, so we have seen oil pretty much undo the ever since the ceasefire in June, right? Oil dropped, I think, almost 30%, but since those June lows, since the beginning of July, we've seen oil undo that, and so far has pushed about 30%. So we are back again to those almost to those June highs, and so yeah, that tells me that we could see uh, the July CPI. CPI for July that now will be released in August, we could see it come out higher, which means we could see the story for higher rates. Yeah, we could see the narrative for higher rates, being stronger again, right? So for oil, I saw oil creep higher on the open. I was anticipating for it to push a little lower, maybe close the gap before I took a position, but it has not. I would rather wait for it to give me a better entry than chase price. So yeah, I'll see how it reacts between today and tomorrow. Preferably not take a trade tomorrow and I will wait for Monday. But yeah, as long as oil keeps pushing higher, then I remain bullish on the dollar. On the indices, I've pretty much remained the same, neutral on indices, on all US indices actually, specifically the S&P, the Nasdaq, and the Dow Jones. That is 500, US 100, and US 30. I've remained neutral on those for a couple of weeks. As you can see, I'm seeing them still consolidating, so I really don't have much of a position despite the fact that we are in earnings season. And yeah, this week we have seen earnings season come out very positively. The earnings per share for most of the companies being positive, but that has not necessarily reflected on these indices. Actually, I think most of them closed bearish yesterday. So yeah, I'm still neutral on this. I'm waiting for your study to see if it comes and gives me an entry down here around 51.5k. Yeah, that depends on how we see candle closure down here. If we see a nice candle closure down here, then I could take a buy position right there and target this size at around 53,400. Yeah. Now let's jump to currencies. Yeah, even for similarly for German 40, still neutral. It's been consolidating. Still don't have a clear bias. So yeah, I'm still in a wait and see limbo for that one. Let's jump to currencies. We saw um, the pound dollar rip higher, sort of brick structure, and I thought that had meant that we are now in an uptrend. But again, I'm seeing it push back lower. We saw it give a nice pattern of lower highs and lower lows. Got an entry here. I think I did. Did I catch this one? No, I did catch this one. And so now it's consolidating around here. I know I've marked up as if I have a position here, but no, I've not taken the position. I usually like to wait for the consolidation to be over, maybe see manipulation, and then break structure down here, maybe retest, at which point then I would have an entry here. But yeah, it's not done that so far, so I'm waiting to see it get out of this consolidation. Bears make money, bulls make money, but pigs get slaughtered and usually get slaughtered in consolidations. So yeah, I'm waiting for it to finish consolidating here, and then maybe I will take a short position. On the euro dollar, I did have a position short position here. Nice flag. My stops were around there. I did catch a nice. I think it was a 1 to 2.5 um, risk reward, something like that. I did have another setup around here. Changes the flag. Actually, let me hide this one first. It's a higher time frame one. I did catch another one around here as well. Another flag pattern, as you can see, did bounce off from the top, the bottom, and then the top again. So I was waiting for it to push lower. So I had managed to catch it around there with tops above here. It was about a 3 is to 1 risk reward. It had started playing out very well. Got to 50% of my target, at which point I moved my stops to break even, and then almost immediately on the open, rallied back higher, and I was taken out at entry. It was a break even trade. So yeah, so right now I don't have a position on this. I'm still bearish on the euro dollar. I'm still bearish on Jew as well. We'll see how they play out. On the euro dollar, earlier I was expecting it to push higher days. A couple of days ago, I was expecting it to push higher, maybe retest this 61% fib level, but it did not. So yeah, but I'm still bearish on the euro dollar as well. I currently don't have anything on the USD card and the USDCHF. And for UJ as well, I had marked up this triangle, but I missed an entry here. We could see maybe still see it pull back before it starts to rally again. I'm not sure, so I'll have to wait to see if I get a position on that. I do have a position on GJ. Something is choking me. Sorry. I did have a position. I do have a position on GJ. I'm not very optimistic about this. I like to see price, as I mentioned, I like to see price immediately move away um, from my entry. But with this one, been playing around, sort of consolidating a bit ever since I took my entry. Um, so yeah, but again, as long as my risk is managed, I'm going to wait and see and let it play out however it wants. If we jump to cryptos, Bitcoin has been dripping lower. For a moment, I thought the bear market for BTC is over. Again, you can see it sort of playing in this consolidation. I thought it was going to break structure above here. Maybe it still will. If it does, then I change my bias. If it doesn't, um, I still remain bearish. But currently, I do not have a position on that. I am more leaning towards having a position on Ethereum. Um, has formed, this is on the daily, yeah, has formed a nice pattern, flag pattern up here. Yeah, I need to drink some water. Has formed a nice flag pattern up here. Um, Initially, I took a position, um, yeah, after this uh, bearish candle close. I had taken a position up there, was targeting, of course, these lows down here, almost at 1500. But I exited the position early, where my buyers had changed a bit. I thought the bear market was over, but it appears that is not the case. So right now, I'm waiting to see it break below these lows, as I've marked here, break below these lows, and then maybe retest, and then I could take a short position that I'll be holding for swing. Swing, yeah. So most of most of the bias that I have. So, for example, the bullish bias that I have on the dollar index is as a result of what I am seeing in the bond market. So, yeah, if you watch the previous couple of videos, I have been seeing the bond market push high, especially the 2 year yields, which has been pushing and pushing higher, targeting at about 4.4%. And although it's been moving higher at snail's pace, it's still pushing higher. So that is indicative of the possibility of either the Fed holding rates higher for longer, or even having a rate hike, at least one rate hike in before the end of the year. The two then have been pushing higher, the 20 as well, and you can see the 30-year yields as well have been pushing higher. So this is indicative of the Fed remaining with a hawkish stance. Yes, previous NFP number did come out significantly soft at 57K. Um, 57, this is data for the UK, at 57K. And inflation, we saw inflation cool a bit from 4.2% to 3.5%. But if energy prices continue to stay higher, then we are likely to see narrative change. Some of those numbers change in August. That is the July prints. Yeah. Yeah, so if I know next week we have the federal funds rate. Yeah, next week is rate week, so we'll see how they play out. The market is expecting Fed to hold um, rates as is at 3.75%. Also for the Bank of England, the expectation. Hey, I think last earlier this week I saw this expectation playing at above 80 for holding rates, and the expectation for rates being hiked by at least 25 basis points was lower than 20%. I think it was around 18%, and this was at 82%. But yeah, as yields keep pushing higher, we are seeing the likelihood for a rate hike climbing dog, but the possibility is that Fed will hold funds as is, which is still a restrictive environment. Yeah? The rate is still relatively high. So anyway, now let me talk about interest rate differentials. Let's talk about interest rate differentials, right? So, what are interest rate differentials? In simple terms, it's simply the difference between the interest rates of two countries. Very simply, the difference between the interest rates of two countries. So, let us work with an example of GU, for example. Let us work with an example of GU. Let us use GU and let us stay on the chart for GU. So, currently, the interest rates in the US. So, okay, the Fed funds rate is at 3.75%. Same to what we have for the pound. I'm at the Bank of England, it's at 3.75%. Right? And in the current market conditions, we could see, I think we saw last week, was it last week or yesterday? Yesterday, was it yesterday? Yes. We saw inflation cooling significantly for the pound. And if you look at the data, we generally have a slowing economy. Yeah, the GDP is relatively weak. We saw with PMIs, both the manufacturing and service PMIs are um, lower than expected. So that means the economy is generally slowing. Unemployment, I think, is at 4.9%. That is an elevated unemployment. So the pound generally is in a situation where the Bank of England could possibly cut rates. So, say for example, right now the over the next couple of months, they have to cut rates to about 2.5%, right? On the other hand, with the US, let's say the energy prices continue pushing higher, and the Fed is forced to hold the rate at 3.75%, right? So you see, right now there is no interest rate differential, but in the future there could be an interest rate difference of about 1.25, right? There could be a differential of about 1.25, whereby one economy is either having to hold rates or hike rates. On the other hand, the other economy is in a rate cutting cycle. So this means that the dollar will have a yield advantage over the pound, and we could see capital flowing now from the pound to the dollar. So a strengthening dollar, and at the same time, a sort of weakening pound, weakening GDP. Weakening pound GBP. And so this creates a scenario where if we are doing GBP USD, uh, of course, if the dollar is strengthening and the pound is weakening, what do you expect happens to the GBP USD? Yeah, it gets into a significantly strong downtrend. I'm strongly bearish, right? So I think let me show you an example of um, what has happened in the past. I know there's a very, very good example for GU in 2022. Right? I think, was it around here? No, this is 2024. We scrolled to 2022. Yeah, right here. So around February of 2022, both the Fed and the Bank of England had their rates at around the same level. Both had to tighten, but I remember the Fed was tightening faster. The Fed was hiking their rates faster than the BOE, significantly faster. And as a result, we saw this move by up to, I think, September, right? Yes. 3,000, it was about a 3,000 pip move down. And if you can compare it to other downtrends where the pullbacks were a bit, steeper, this move had pullbacks that were very, very small pullbacks, very shallow pullbacks. You can see that 3,000 pip move, very beautiful move as a result of an interest rate differential. There are other examples as well. I think USDJPY had a similar play from around 2022, I think, to around 2024. Um, yeah, there are quite a number of examples of the same happening across different currencies. I think AUDJPY, uh, I saw AUDJPY had the same as well. Um, yeah, so I'm sort of interested to see what happens, because right now the Fed has sort of hawky, hawkish stance with the possible with possibly holding rates at 3.75 or increasing rates. And for the pound, we sort of have a dovish stance, or a dovish stance, where we could see them cut rates. And yeah, we could see another interesting scenario where there will be an, an interest rate differential, and we could see GU melt significantly lower. And so, of course, this could change as the data changes. Important thing is to stay aware of what is happening with fundamentals, and yeah, not not getting married to your bias. I think that's a problem that I still working on, getting married to my bias. And yeah, have to remain on top of, you know, data releases. So I think that's it from me for today. I've seen gold has closed below. I think silver, yeah, silver did not close below, so we'll see how it plays out. But anyway, if I decide to keep this trade, I'll update you on our Monday or Sunday pre-market analysis. Um, I don't know how likely I am to take the position. We will wait and see how it plays out today. I don't like executing Sana Sana on Fridays because Monday we usually wake up with crazy gaps and Trump is unpredictable. You can tweet something over the weekend. But anyway, I'll see you guys on the next video. Please make sure to be careful out here in the markets. Do your own analysis, do your own research, yeah, and arrive at a conclusion. And of course, as always, observe proper risk management. All right. So I'll see you guys on Sunday for our pre-week or pre-market analysis. So yeah, ciao guys.